Hi Dan, it's Trevor.
Morning to you, Trevor.
Morning.
Let me just make you the presenter. Okay. Okay, you should be able to show your screen now.
Okay,
Okay, we're looking at Euro USD daily, is that right?
that's it.
Or
That's
should
where
that
we're
be
going
right? Okey-dokey. Well, I make it 9 a.m. Should we get started, Trevor? If
Yes,
you're
indeed.
ready. Okay, hello everyone and welcome to another technical analysis webinar with Trevor Neil, an Easter technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, please ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We'd like to remind you that this webinar will be posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again or you'd like to go over any particular part again, you can do so there. And we'd love it if you subscribe to our channel and click the bell to get notified. The webinar handouts can be downloaded from the handouts tab, as you're probably already aware. These are a CFD guide, which explains the different products we offer at FX Choice. And the other is a webinar guide, I suppose, which helps you understand the different indicators that Trevor uses and what the kind of lexicon that he's talking about whilst doing the webinar. If you're watching on YouTube, by the way, these handouts are available in the description box below the video. For those of you who don't know Trevor, he's very experienced veteran technical analyst and trader with over 40 years experience, worked as global head of technical analysis at Bloomberg, among various other prestigious institutions. So, Trevor, without further ado, over to you, sir.
Yes, morning everybody. Thanks very much, Dan. And thanks for joining us on what is for many people a holiday, but not for the markets. The markets never sleep, as you know, and so today's just another day, as far as they're concerned. And please, if you have any questions along the way, please ask Dan. And what I'm going to cover today is going to start with currencies, then cryptocurrencies, and then gold and Brent crude oil, and then into the stock indices. But if there's anything that you want me to add or cover in more detail, or any questions you have about what I'm saying and the interpretation and what I'm showing, I'll be pleased to answer. Okay, let us start with an overall look, and I like looking at the relative rotation graphs, and regulars here will be familiar with these, but we're getting a very, very clear message from the RRG of the G10 currencies here. Now, just for those of you who are seeing it for the first time, just very briefly, in the middle here, we have the US dollar. Everything to the left is weaker than the dollar. Everything to the right, which you can see is nothing, is stronger than the dollar of the G10 currencies. And then on the y-axis here, this is with positive momentum. So things which are higher have got positive momentum. If we had something in the leading quadrant here, this would mean it was outperforming with positive momentum. Obviously a strong thing. Over on this opposite quadrant, lagging quadrant, got New Zealand dollar most to the left here, so weakest of the G10 versus the US dollar, and also very low, lowest actually in terms of positive momentum. So this is, if you like, the worst, technically the worst currency versus the dollar. In fact, there's nothing better than the dollar. Those of you that were here last week will remember we had the Canadian dollar outperforming and on its own, outperforming the US dollar, but it too now has moved across on the Australian dollar too. These little dots here, the trail is this is Friday, this is Thursday, Wednesday, Tuesday, Monday, going back in time. So this is showing you the journey last week for the currencies. So you see this dramatic change in circumstances, and Australian dollar here, you know, really come round hard. Canadian dollar, sorry, which was outperforming, as you know, has now come back right on par with the US dollar itself. So there's a very strong message and a clear message. I'm sorry I went into too much detail for those of you that are familiar with it, but essentially now we've got everything on the left. That means there's nothing better than the US dollar to be long of. It's a question of what you want to pair it off with, and there you've got the individual ones. There's sterling there, almost, well, apart from the Norwegian kroner, almost the furthest to the right of the rest of the currencies here. So, and much further to the right than the euro, for example, which I'll be discussing in a moment. So let's go to the actual charts now and start with the euro itself. So here's the euro, which is weak. So it's going down versus the dollar. And we've got a downtrend line now through March and extending, and we're close to it, just below it here now. The moving average relationship, I know it's probably not that easy to see on the chart, but here through the middle of the Bollinger Bands is the 20-day moving average. Here, the red one is the 50-day average, and then above us here is the 200-day average. So for the first time in, I'm not sure how long it is, the order is 200 on top, 50 below it, and 20 below that. That's a bearish configuration. They're not spraying out, which would be very bearish indeed, but definitely it's gone from neutral to bearish configuration. However, in the shorter term, we've got a number of things to be hopeful here. We've got a bullish divergence, a mild bullish divergence in the RSI, low, lower low in the price, low, higher low in the RSI, and then the RSI has come up through 50 from below here, so that's a short-term buy signal against the trend. So the tide is going out, the euro is weak, but the wave looks as though it's about to come in against the direction of the tide. But the trend is now gathering strength. We see this from the ADX, and so it's a bearish market, perhaps going to rally in the early part of the week, but probably either this downtrend line will rebuff it, that's at 118 or just below 118 now, but if not, we've got this consolidation here. That's and so we're inside that now, and that's why probably it's slowed up the decline, because that's quite a big support area there. But context is a bear market rally, mild weak rally, looks like starting now. Nothing like a bottom or anything like that yet. The pound cable. Let's look at the weekly first here. We're trading, we recognize, of course, years ago or ages ago, the resistance and the significance of the 2018 double top there, and we pushed towards it in recent months, and it's been rebuffed from it. And that was a fairly predictable outcome for that such a strong resistance point. We probably won't need it, but the support below us here at 133, 34, or all the way below us here now. But this resistance seems to have rebuffed us enough to turn the weekly chart rather bearish. The MACD, the weekly MACD, has crossed downwards now, and the MACD and the RSI is also broken down through its 65% line here. So the context here now, the tide, if you like, is now gone from strength to weak. Just move that there. So here's a short-term downward channel. We're on the daily chart now. Going back towards, I've given this a cigar, this consolidation here. We traded quite narrowly for about 6 weeks in here, and we've come back to it and we've bounced at it here now. Testing this today, the upper side of the down-facing channel, MACD threatening to cross. The RSI did cross at the third week of March, giving us this rally here. And so we have to see whether it peters out here, which, given the direction of the tide, my bet would be that it will lose power here during this week and turn down again and maybe punch lower into this consolidation area here. So I don't think this trend short-term uptrend at the moment is going to developing into anything more substantial than a counter trend move. The signals will be the breaking of the downtrend line, and then also the break of the high here. This is a very weak resistance at the high here at 140, and then this top here at 141.40. Of course, we still have the big double top to deal with there. So there's a lot of resistance above. It's done well, the pound, but it's struggling now. But where you do see a good opportunity is the pound versus the euro. And remember their position in the RRG chart, both of them to the left of the dollar, but the pound right of the euro, so the pound better performing than the dollar. But look at this, there's a chart of better performing, isn't it, here? So let me show you the weekly first. So the weekly chart has been strong all year. We've been strong. RSI still plowing ahead. I know it's high, but it's still pointing upwards. MACD powerful. We're heading to a very important resistance. It's still well above us, 3 cents above us, but at 120. That's going to be stubborn. That's like the 2008 double top for sterling, and I would be very surprised if we didn't stall or slow down or stall or have a reversal or consolidation before that point. But at the moment, the power is strong on the upside here, and here's now back to the daily picture. So what have we got? We've got the ADX at 30 and rising, so that's the uptrend is strengthening. The moving averages 20, 50, 200, 20 moving away from the 50, 50 moving away from the 200, very strong. Up at the top, the upper Bollinger Band's beginning to expand, showing more energy coming into the market. So this rising thing is gaining strength. The MACD is already crossed. The RSI is is high but pointing upwards. So it's a bit like here. It was high but pointing up. But we had a move like that followed it, stayed high and pointing up for a long period of time. It can do that. There's no message until it turns down. Obviously, the higher it is, the more violent the fall can be. But it doesn't say there's going to be a fall necessarily because it's high. High is high because it's strong, not because it's weak. So the message, the short-term message for the beginning of this week is that we've got the tide is strong, and the wave is in the direction of the tide, and even the wavelet is in the direction of the tide at the moment. So during the week, that structure can change, but the background is definitely strong, and this is a good one to hold. I want to look at the Canadian dollar because we had been talking about that as our opportunity to outperform the US dollar, but it's lost that edge now. There's nothing outperforming the US dollar, and so this going down here would be dollar weakness. Well, it's flattened out here too, and potentially forming a bullish pattern here for the US dollar. Low, low, lower low, lower low, and now not making a new low so far. MACD is positive. The RSI is neutral. We've got this down channel threatening the top side of the down channel. Now, I think that this would be a very small right shoulder if it was a right shoulder, but this could be left shoulder, head, right shoulder, and quite a deep head there, which would indicate a move up to about 129 if we saw it break up through this down channel here, which is also the neckline of it. So I'm not sure that really that is enough of a right channel. So we haven't had enough of an attempt at a new low, but anyway, it's threatening to have a bottoming formation here, which would change a long-term relationship of really, really good outperformance of the US dollar. And New Zealand dollar, Japanese yen. I go to this one in particular because I want to follow up on it because I've been talking about it a lot in the past. I liked it a lot. Well, since about this time last year, we've been bullish of it, and it's gone up strongly. Now pulled back hard to 61.8% of the recent move. So in the context of it being a strong market, here's the 61.8% pullback in there, and now bouncing off that and pushing up quite strongly. The RSI has already given a buy, coming up from 35 from below. The MACD is about to cross here. The ADX is low and pointing downwards, so telling you the trend is weakening. But it looks as though this could resume. That's what I want to come around to. The 20-day average is above the 50, is above the 200. So the whole structure here is still bullish. We've had a retracement, seems to be pulling out of it. We've got these two highs in place here, double top actually in place here because it completed the double top, high, second high, pull back in between, and we went to the minimum price objective generated off the the double top into this consolidation here, and it held, and I think it's on its way up now. So I think pretty soon we'll be challenging that 79.10 or so high there, and so that long-term favorite of mine will continue. It's the stagnation of the yen that we're playing here there. Moving on now to the cryptocurrencies, and once again, if you don't mind, I will use my relative rotation graphs to show us the relationships there. I've deselected all the other, you see I've got here the ability to see all these other cryptocurrencies because I just want to concentrate on these three. These three for me are the most important ones. The other ones are too minor, and unless you're playing the game of looking for the next secret best thing, which is a hard thing to do, let's stick with the main ones. And the main three are Bitcoin, Ethereum, and Litecoin. So, those of you that are not seeing relative rotation graphs for the first time, let me direct you to relativerotationgraphs.com. It's a bit of a mouthful, and then if you register, which is free on there, you will be able to see these charts for free. So if you do RRG, hit on the top menu section, RRG online, it'll give you these relative rotation graphs online. So here we've got the US dollar in the middle. So here's where you can get performance, not through a regular G10 currency, but through a cryptocurrency. We've got things to the right of the dollar, outperforming the dollar. We've got Bitcoin, which was in the lead last week when we did this exercise last week. But Ethereum has come around really fast. I say fast, I can say fast because that's Friday, Thursday, Wednesday, and look at the gap between Tuesday, Wednesday, Thursday, Friday. Gaps widening here, speeding up in outperformance of the dollar, that's to the right, upwards, is with positive momentum. And so this is outperforming with positive momentum. It's heading northeast. That's the good direction. So Ethereum here breaking away, actually making new highs, as you know, at the end of the week, and looking really, really good. Bitcoin struggling a bit with its previous high, but still outperforming the dollar. And Litecoin, we'll have a look at that in a moment, is actually quite a bit below its previous high and is really struggling. It's being more pulled up, and you see it's left of the US dollar, so that means it's outperforming, although its direction is good. Northeasterly direction, big jump across here with power. I wouldn't be surprised if next week that's across there. Don't you think? As a chartist, I think I see the direction of the trend here. And so Litecoin being an underperformer of the US dollar probably will, by this time next week, will have changed. But so what is the best thing for us to do is, with our resources? Let's look at Bitcoin. Let's look at, actually, let's go in order. Let's go to Ethereum first. So obviously, I'll just show you Ethereum there, very, very strong new high there. And that's for some reason gone back to New Zealand dollar. In fact, now refusing to move. So now we've got Bitcoin weekly. That's looking good. What happened to me there? Ethereum, New Zealand dollar, Ethereum. Okay, excuse that. So here's Ethereum, broke its high, the February high last week. Broke it with a nice candle. I was very pleased when I saw that. But then since then, it's really not followed through at all enthusiastically. The moving averages, well, 20 is now above the 50, is above the 200. That is good, but it's not playing out wildly. So it's not as good as it really could be if it was rampant. The ADX is coming up nicely, pointing in the right direction, so the uptrend is strengthening. The MACD is of course positive and has been since the end of March. But the RSI, having had that great power move of the break to new highs, has drifted since then and is threatening today to cross down through the 65 level, which would be my trigger. So this would give us a tide going out, I think a wave going out, but a wavelet coming in. So if you think of it as with that analogy, so we've got the tide. The tide has waves which go in and out against them, and so we've got a wave which is in the direction of the tide, but we've got a wavelet which is against the direction of the tide and the wave. This is the wavelet here. It would, if it's not going to develop into anything, which I think is the case, it will probably stall here and at around at this previous high, and that would be around well 2000, the round number. So consolidating, having crossed the big psychological barrier of 2000, and as such, I think might well present opportunities for some people as soon as it starts to show signs of stabilizing. Going to the second one, which thankfully has now moved. I'm going to move this over here now because we need to point that up there. That's just to remind me, A, B, C, Fibonacci projection 71,000. That's my long-term objective for Bitcoin, not as yet achieved. The weekly trend, of course, is bullish, hooking over a bit here. We had this bearish divergence in here, warning us that this recent run up last month or so was weaker than previous ones. So a sort of slowing up, loss of momentum was actually shown in the chart, and we're seeing that now. We had a high and a higher high here, and we had a high and a lower high here, which warned us that this top was not being made with enthusiasm. We came back below 35 and turned up again. That was you know, an indication that the wave had moved against the tide, but now was moving back in the direction of the tide as it came up here, and that started to happen. And it's gone up high and now turned down here, and so this is now telling us that the wave is moving against the tide. Tide is out, and the wave is now coming in against it. But I think it's doing that very weakly indeed, and it will start to pick up. It will start to consolidate and start to move higher again. But this is quite a weak-looking bull move. It's weakened bull move. In the weekly context, there's no denying it's strong, but we're definitely got a little bit soggy here, and we don't want this to develop any further. Higher high, lower high, that sort of talk coming into the market, breaking a neckline and giving us a decent sell-off. But too early to say, but watch for that. Watch for this. It's not as rampant as Ethereum was. And then Litecoin, here, previously we look at high, higher high, lower high. Well, this is worse. It's high, lower high, lower high. So I'm going to draw a downtrend line across those three highs now, and you can do that. They're just nicely lined up with each other. So that's a very significant indicator. I'm making it red. I like to try and remember to make resistance lines red. The relationship here is not splayed out the way we would like, 20 above 50, above 200. It's the 20 is now below the 50, and they're close together, and the 200 is right down here. Both of them probably providing a bit of support. So just a flash at the weekly chart. The weekly chart is looking strong. The MACD coming perilously close together. The RSI, very topping pattern here, and a bearish divergence actually for quite a lot, the last part of the move here. And this maybe, symmetrical triangle, this all could develop into something rather negative actually. So we've got the three lower highs in here. We've got higher lows in here. I'm not going to draw this in unless I can draw it right back to here, because I want my 3 points. Yes, I can. I'm cheating a bit. Now, when I cheat, what do? I make the line dashed. Okay, and that is just reminding me I drew this line rather poorly, but there's definitely a pattern of rising lows here, but they're not lining up like that. It's just shorthand. Remind me not to place stops around that line because it's imprecisely drawn. This one is too high, these ones are too low, but they definitely are lining up. So I want to note that, which is this triangular shape in here. It's narrowing up very sharply. It's got to break out one way or the other. The RSI is coming back towards neutral. The ADX is very, very low, and that indicates we've potentially got a breakout occurring. That's what the message of that is. And I would say with the narrowing pattern here, we definitely got to break out one way or the other soon. And the question is, which way is it likely to be? In the context of the long-term trend, it's still marginally to the upside. It is a very, very strong trend, but this is quite a toppy looking pattern. We've got clear levels, so the breaking of this rising pattern here would be the breakdown level, with the support levels being very significant, and then breaking up would be breaking the downtrend line, which would take out that high as well, and that high, and then the all-time high in there. If we're looking for support, well, we've got quite a lot of different support levels in there where the market has gained buying power before, but this is this is a much more questionable pattern, this one here. So in order, it's Ethereum. We see this so clearly in the RRG chart. Ethereum number 1, Bitcoin number 2, and Litecoin, avoid. Okay. Okay. So moving now to gold. Now gold, I've not been a friend of gold for a while, and that's been because we've got, looking at the weekly chart here, we've been in this period here. But we did note, we gave a cigar to this area here from the summer of last year. Big consolidation between essentially 1680 up to 1750, round numbers, consolidation there. We spent several months in that area. We're back to it now, and looks like it's consolidating again, mirroring that area again. The MACD has been bearish since September, and the RSI has also been bearish since that breakdown through 65 here. We've been going down with a series of lower highs, still uninterrupted. But I'm going to draw a trend line in here because I think that could signal the end of the move if it breaks up through there. Hasn't done it yet, still pointing down, but come down to a very solid level of support. And now it's done something very interesting at this solid level of support. Don't forget that's off to the left. It's formed 2 lows at 1680, low and again low there. And we bounced quite well off it, signaled by the, on the second low, the RSI moving up through 35 here, giving us a buy signal. And the MACD never did cross, even on that second low. The trend, RSI, the ADX is 34, which is pretty good trend strength. So what is this saying here? How is this likely to resolve itself? We've got this narrowing up of the Bollinger Band, so showing no kind of energy at the moment for a breakup or a breakdown. We've got this resistance level, and I think the point to take note of is the high of the high in between the 2 candles. And that is at, just want to show it to you there it is there, 1755 here. So if this were to be a double bottom and we broke 1755, that would give us a minimum price objective of 1830 up here from the double bottom formation, which would take us into this resistance area here. So we're pretty close to an area where we could get a catapult move, and it fell very fast here, so it could rise pretty fast here. So having been bearish all the time, always talking so negatively about it, I think we're bottoming. So using the context of the tide, the wave, and the wavelets, the tide is coming in, so it's going down. And the wave is potentially at turning point here between going in and out, and the wavelet is positive, is going out. That's the picture that we've got here. So it's not clear yet whether this wave is ebbing or flowing here, but we're at a very important point. We've got very clear levels, this high here and these 2 lows here, 1680 down at the bottom here, and I said again, 1750 at the top, that range there, very, very important. Break to the top, we've got a double bottom, break to the bottom, we're plunging through the support, the old historic support, and that continues the very bearish trend. Crude oil, quickly, crude oil, just a glance at the weekly, very important. That's the wrong crude oil. I want to look at the Brent crude oil. Sorry, I clicked on the wrong one. $70. That's a 70. Yeah, $70 here. Bit above $70. Look at that resistance, spike high, and then there it was. Very predictable that we were going to stall at that level. We came back hard, 61.8. I'll magnify this in a moment from this last part of the move here. But the longer term technicals have turned negative at this point. I'm not saying it's going to happen, but look what happened when this happened the last time here. Okay, doesn't it look very like that? Very ominous indeed there. So that's what we've got in the long-term technical situation. I've got an up arrow here because it's still above it at the moment, but it's threatening to cross, and this has crossed down here. So the tide looks as though it's turning from out to in. Now, what have we got here? Now we've got an ominous looking pattern here too, haven't we? We've got a high, a higher high, and a lower high here. This would give us a potential head and shoulders, but the neckline is a downward sloping neckline, and it's way below us. Actually, it's around 58, 59. Well, $58 in here, so way below the $63 we are now for it to be a head and shoulders. But we've got this a downtrend line in the RSI, so we've had divergence, negative divergence all through this pattern here, showing us the lack of momentum on the upside. So in that context, we did have a move with the wave against it, but then back in the direction, upward direction. But now it looks as though it's turning down again here now. So I'm getting increasingly worried that I've got a proper top formation forming as a long-term move reaches a very significant resistance level that has rebuffed it 4 times before, very significantly when it's been touched. That's at a level just above $70, and we've done it again. 71.47 was the high. And this support level here that I got with the cigar, it's very narrow here, isn't it? So this isn't really very strong support. We spent a long time trading in a $3 range here, but that's a very narrow range to spend 4 weeks trading in. So it won't provide enormous support for it if it decides to go down. So watch out for a major direction change here. However, if it breaks out to the upside, and that isn't that far away, you know, then it's a different game. Right, moving now to the indices. Any questions so far, Dan?
We have, Trevor, but they've always been about gold.
Oh, so well, let's go back to gold before we start the indices.
No, it was people wanting to just see gold. So actually, no questions about it. It was just requests, I'm afraid.
Okay. Gold. Yeah, okay, a bit of a brighter opinion on gold than I have had, and well, we've got reason. Last week was significant. Not breaking that 1680 low was, you know, it's quite an important, a very important technical position, and the longer term picture is changing as well. So double bottom might be the ultimate end of the fall, but we'll see. It's early to say that yet, but we know our levels very, very clearly. Okay, then now we'll move on to the US 500. All-time highs again here. So here it is, powering ahead. You are living through something wonderful, folks. This is a wonderful move. This is a wonderful move. No matter how old you are, unless you're ancient like me, you've never known anything other than going up, and you have occasional hot rate increasing events like that and like that, but basically it goes, you're living in an unusual world. The MACD has turned positive again on the weekly basis. The RSI, which is once again, you know, bearish divergence, which has in this case not turned out, doesn't look like it's turning out to be the end of the move. We will negate it if we break the downtrend line here, which we haven't done yet, to be fair, but we are making all-time highs here, so it's looking pretty strong. Here's on a daily chart, the bearish divergence here got me worried. Well, I shouldn't have been worried. It's going up. It didn't really sell off at all. Only came back to below 50% in the RSI in this little dip here. Now we're already on to new highs. So that turned out to be a buy opportunity, and really the mildest of all possible pullbacks there. The MACD is positive, so we've got blue sky above us, and it looks very strong. We've got support levels all the way down. Of course, we've had dips and minor dips all the way down. The RSI is, I had drawn this line in. This is from last week. Well, to extend that line, it's been broken to the upside. So this bearish divergence I was worried about here, which was always mild anyway. This was hardly a new high, and this was only just lower than that. But you know, I did say that there's potentially we've got at least, very least, a decline in momentum, which could develop into something else. Well, it didn't. It was very weak indeed, only coming below 50 here. Now we're breaking up. This is a resumption of the strong message. So here we've got tide going out, wave going out, wavelet going out as well. So everything is lined up here, much like the moving averages 20, 50, 200 here. All looking good here, and this will now develop into a support area for it. Now we've broken clearly through it. My favorite index has been the Germany 30, so D30. So we were moving up here in a channel, but it's now broken out through the top of the channel. That's quite an unusual thing for a market to do, but look at it here. MACD, very, very strong. RSI, very, very strong. I know it's high, but it is pointing upwards until it turns, at the very least, turns down, or for confirmation of going against any sort of trend, which is something you should do with a great deal of respect and trepidation. It would have to turn through 65 from above, but then the last time it did that, that was all that happened there. It's really strong, and all the previous resistance levels are now support levels. So when we look at the daily chart, it's also very strong. Here we've got now, I put this cigar now, which was really for almost 3 months was stagnating the advance, but now this was the crucial break point on the second week of March, and off we went. It was my birthday, actually, that happened. So I got a birthday present on that day from the D30, and up it's gone since then in a really nice way. ADX climbing strongly, RSI climbing strongly, MACD climbing strongly. 20-day, 50-day, 200-day averages all going up in the right order and expanding out. This is everything technical is bullish in the market, and it's a really strong. The only worry is, of course, the RSI is high, but the high, as I keep saying, is because it's strong. There's no indication today on Monday that there's a top in place. During the week, we could have an intermediate top for sure, because it's vulnerable to profit taking for sure. But the trend is strong, and there's any sell-offs like that will be buy opportunities. Finally, I'd like to do the FTSE. And because FTSE's also got a very interesting technical situation. I didn't mention, sorry, I meant to mention in the German 30. Don't forget, one of the reasons why this one is taking off is not only is Germany a mighty nation, industrial nation, but it's a huge exporter, and it's got the benefit of a weak currency. And so that means that its exports are weak, and many of the constituents of the German 30 are dollar or foreign exchange earning countries like car companies and so forth. So it's very, very sensitive to the euro. Give it a weak euro, companies are going to make big profits. This is also the case with the FTSE as well, but we haven't got a weak currency. We've got a relatively strong currency here. So we've got, I just want to remind you the big picture here, this massive from 2.5 year consolidation here is above us. We're forming now this triangle on the weekly. It's looking steady inside that context there, but with that massive resistance above us there. So here's the triangle here. It's pretty well defined. I'm actually going to take this from a dashed to a solid line, because I think I have got 3 good points on this now. So I've got much more comfort that this is a meaningful line, 1, 2, and that's enough of a rejection to say it's the 3rd point. Let's extend this now into here. We've got 3 very good points on the bottom side of it here. So we've got to break out of this one way or the other. The Bollinger Bands aren't giving us any indication it's going to be in the next few days because the volatility is dropping. It would be increasing if it was like to be soon, which is surprising because it's getting very narrow indeed now. The MACD, the moving average situation here is the 20 is above the 50, is above the 200, but it's they're not particularly widening out that strongly, so it's bullish but not strongly bullish. The RSI is at pretty well at 50 at midpoint. The MACD is mildly negative, but more it's trying to move towards zero to reflect the flat trading conditions here. So I'm afraid to say that we've got no indication really at this moment that it's about to break out, except that it must break out of the triangle soon because the triangle is narrowing so much, but it hasn't got any indication it's going to be now or which direction it's going to be. But as technical analysts, we've got clear levels, 6,770 here on the upside at the moment, and then the bottom 6,550 at the bottom. And then I think that we will break out powerfully. And I really, as a technical analyst, I'm not sure which it's going to be of the two. It's an inner bull run, but it's at very, very significant resistance. So it could be stalled, or it could have a surge at a resistance. I don't know yet, but we're not in the business of doing that kind of forecasting. We just follow the messages of the market. All right, my friends, any questions at all?
Yes, we do, Trevor. Yes, we have a question from Mustafa. Thank you for your question. Actually, he asked two questions. He says, is it possible gold can break resistance to $1,800?
Well, yes, very much so. I think very much so. So if this turns out to be this double bottom pattern I was talking about here, the trigger is the break of 1755, and if we do break that, then I think we'll go slightly higher than 1,800. I think the count from the double bottom, so from the high to the two lows, takes us to 1830, right into this resistance here. But the trigger is the break of that point there. Don't forget that most times when you stop at the same place twice, it doesn't turn out to be a double bottom. The breaking of the high in between is absolutely imperative to even utter the word double bottom, because stopping at the same place twice is something we often do on the way down. And this may be another one of those cases, but we're close to testing that level, and those couple of bars there last week before the sort of holiday set in were very positive, and so we're having a go at it. So he said, is it possible? Yes, definitely it's possible, but we've got a clear trigger which we haven't had yet, which would then turn that highly possible, highly probable.
Okay, I hope that answers your question. We've also had another one. If you've got time, Trevor, can you squeeze in the Dow Jones?
Oh, the Dow Jones, yes.
Yes.
Well,
the US.
We neglect the. Oh no, do you know I can't? I'm sorry, I haven't got it set up. I can't. Sorry.
Never mind.
I apologize for this. I'll tell you the truth. The Dow Jones, the company, has just started charging exchange fees on Refinitiv, which is this platform here, Icon. So in order to have it, even to get the closing prices, you have to pay a fee. It's a very small fee, but I haven't paid it yet. And
Trevor,
really
let
annoying.
us know.
Yeah. So so embarrassingly, it's not there. So next week I will do it, but it's bullish, of course, as well. And you've just got a narrower version of the 500. But we have got a different message here on the 100, and it's not made new high yet. And we had talked about this a few weeks ago about how the tech stocks were lagging, and it's the old growth stocks and banks and airlines and things like that that have been bouncing very, very strongly. It's a it's a nature of statistics, isn't it? That on recovery, the ones that went down fastest are the ones that go up now. So here in the UK, a year ago, we were approaching the worst point in growth and various fundamental data. So this means when you compare the now with a year ago, we will get dramatically positive numbers, which will seem like we're soaring out of, it's all over, it's power, it's fantastic, and all this kind of thing. But that's because what you're comparing with, and when you're comparing with a thing which is falling very sharply and then you're rising, then it looks very strong on the upside, stronger than it really is, because it's the shape of a V. If you compare something that rises slightly compared to last month against something that was falling very sharply a year ago, then you're going to get a false impression of the strength of it. So look forward to that in the UK. Brilliant Boris Johnson loving data, but it's actually a statistical anomaly of a V shape. So that wasn't really your answer about the Dow Jones, but hopefully it was useful.
Okay, well, thank you very much for your question. I think probably that's it, isn't it, Trevor? Are we finished?
Yes, I am finished, and thanks for joining us on this, for many people, a holiday day. I appreciate that. There's a lot going on, and thanks for doing it. It may be useful that you did spend the time doing it, and you may benefit from that. And so watch all these levels. We've got some important messages coming up, and either trend resumptions or the fact that we're at significant long-term resistance being enough to rebuff the markets. And we'll know that pretty soon, I think, and that'll be a feature of this month of April as we resolve those things either to the upside or failure.
Okay, well, thank you very much, Trevor. Thank you, everybody, for attending. Please join us again, same time, same place next week. And don't forget that we'll be posting this webinar to our YouTube channel in an hour or so. So if you came late or you just want to watch again from the beginning or just a small piece, head over to our channel and don't forget to subscribe and click the bell to get notified. Okay, thanks, Trevor. Anything else to add?
No, thank you very much indeed. Have a great week, and thanks, Dan, for looking after us, and thanks for joining us, and may the trend be with you.
Thanks, Trevor. Bye, everyone.
Bye-bye.